Okay, so good morning, everyone. This is the Crop Insurance Claims for Grape Losses webinar featuring presenters from crop growers and RCIS. We will be covering crop insurance claims related to the spring freeze that occurred that affected growers in Western New York. Before we begin, a couple technology tips. To expand the GoToWebinar control panel, there should be a red arrow up on the corner of your screen. If you click that red arrow, that should expand the panel. And it gives you a number of menus. You can expand the question menu and type in your questions at any point during the presentation. I'm probably going to hold most of the questions until the end of both presenters, and then we'll ask the questions of both of them because many of your questions hopefully will be answered during the presentations. The webinar is being recorded. It will be recorded and archived at farmcrediteast.com/webinars. And we typically get the recordings posted within about 24 hours of the conclusion of today's webinar. So with that, I will introduce my presenters for today. Deanna Brennan is a grape crop insurance specialist with crop growers, Farm Credit East's crop insurance division. And we have Amanda McDowell, who is an area claims manager with Rural Community Insurance Services, otherwise known as RCIS. She will be presenting second. So with that, I will turn it over to Deanna to present. And Deanna, when you want the next slide, just ask me.
You can go ahead.
Okay, so there's our agenda. So we're going to begin with the grape crop insurance overview with Deanna, and then we'll have an overview of the claims process. And then finally, as I said, we'll have Q&A at the end. So Deanna, you want to begin with the disclaimer and then we'll go through the presentation?
Yes, thank you. So just a quick disclaimer, this presentation is intended to just be a general overview and does not take the place of any of the crop provisions, special provisions, or loss adjusting manuals that are housed on RMA's website, which I will go into a little bit about RMA. So you can go ahead to the next slide. Just a little bit more about crop growers. As Chris mentioned, we are the crop insurance provider of Farm Credit East. We have agents that operate out of all the Farm Credit offices, as you can see on the map. There's roughly about 30 of us non-commissioned crop insurance agents that serve producers in our area. And we do have a centralized operations center in Homer, where all of our customer service support and policy support individuals are based out of. Next slide. So if you've been on any of our calls that we've done in the past, this might be a repeat of information, but just in case there are folks on this call who are not familiar with crop insurance or who just doesn't know a lot about crop insurance policies, I just wanted to go over a few basic terms, and then we'll get into kind of the meat and potatoes of the crop insurance policy for the grape crop. So you may hear me talk a lot about RMA, and that is USDA's Risk Management Agency. They are the entity that facilitates and oversees the federal crop insurance programs. An AIP is an approved insurance provider. So there are only about a handful of those in the country, and it's essentially an insurance company that's authorized to write crop insurance policies. So Amanda works for one of those companies, RCIS. At Crop Growers, we put our customers with the top 3 AIPs in the country so that they're getting the best service possible. And then APH stands for Actual Production History. Most of the perennial crop policies are going to be an APH plan, and I will get into what that means coming up here shortly. Next slide. So again, just some basics here. Crop insurance is a federally subsidized program, which means that its funding is found through the Farm Bill. And as you select coverage levels, the subsidy amount that you get will depend on that coverage. So your portion of the premium will kind of slide accordingly. And I've got a slide coming up that will show you that. Crop insurance is based on your yields. So with a Grape policy, it uses a rolling 10-year average or a 10-year history to determine what your approved yield is going to be. And if you don't have a full 10 years, don't worry. Maybe you purchased a new vineyard, don't have past year's records, or it's a newly planted vineyard. There is a formula to help you determine to backfill that history and establish your approved yield for the policy. And prices are established by RMA annually. They get updated by August 31st. That's when those prices are released to the public. So essentially it creates an established price per ton, and those are different based on your variety. And what that means is that is the price you will receive per ton in the event of a loss. You can go to the next slide. So here's a chart with your coverage levels, and it just outlines the premium support. So the base level policy is a catastrophic plan. So you get 50% of your crop is what you're protecting at 55% of that established price. And then as you get into what we call a buy-up policy, your percent goes, you can choose either 50 to all the way up to 85% coverage, and you're getting 100% of that established price. So you can see the federal subsidy percent will decrease as you go up in coverage, and your portion of the premium will go up, just so that, as you're getting increased coverage, the skin in the game will increase as well, since you're increasing that protection and liability on your policy. And we can go to the next slide. Another layer of coverage that is available for grape producers is what's called the Supplemental Coverage Option, or SCO. This is an endorsement that is added onto your underlying crop policy. It covers up to 86% of the expected area yield. So this is great for growers where maybe your vineyard in particular isn't necessarily susceptible to all of the kind of weather events that happen in your region. So you have really good yields, but perhaps the region may be suffering a loss. Potentially, you could be eligible for an area indemnity and not necessarily an individual plant indemnity. This topic could be its own presentation. So this is a very high level review of SCO. So I would definitely encourage you to sit down with your agent and look at the numbers to see if this would be a good option for you to add another layer of coverage in addition to your individual underlying plan. Next slide. So this chart here shows you these are 2023 policy numbers. This shows all of the crop insurance plans for grapes in New York State as of last year. You can see majority of growers insure their acres at 70 and 75% coverage. I think total we were just shy of about 19,000 acres that were insured across New York State. And you can see in the far right, the indemnity column. So now that all the 2023 claims have been closed out, you can see where the indemnity amounts fell for growers across New York State. And this is all growers in the state, not just growers insured through crop growers. And then the next slide will show kind of where we're at projection wise for 2024. These are the acres that are currently insured for this year. Highlights just what the liabilities are at as far as, where is the protection for our vineyards in New York State. And then moving on to the next slide, this will go over your options for how to insure your vineyard. So with grape crops, we currently have two options in what we call a unit structure. So you can insure all of your acreage in the county as one single unit. This would be a basic unit. It's going to give you the least amount of protection, because you would need to suffer a loss across your entire acres in the county. Whereas majority of growers, and I think probably all the growers that we see have optional units. A few ways that you can break down your acres are as indicated on the right side of the slide. Typically we see them broken out by variety. However, if you do have multiple farm serial numbers, different types of practices, and any non-contiguous land, you would be able to break down your vineyard into different buckets of protection, essentially. So when in the event of a loss, each of those units would be looked at separately in a claim. And next slide. Amanda will be going over this in greater detail, but just a few highlights on this slide. So you do need to have hard copy records for at least 3 crop years plus the current crop year that you're in. In the event of a review, you would have to provide those records. And it is important that when you are reporting your production to your agent, that it is not over-reported by more than 5% on any database or unit structure. Next slide, please. So relatively new, I think the last 2 years, this was an update that all varieties, so hybrid native vinifera, they must reach the 4th growing season after being set out. And there is also a production requirement for them to be insurable. So they have to produce at least 2 tons per acre in at least one of the last 3 most recent crop years. If you are in a county where grapes are not currently an insurable crop, you can apply to have them insured via written agreement. That would be something you'd want to work closely with your agent on. As of last year, vinifera grapes were added to all the counties, so they no longer require a written agreement. And one thing I didn't highlight at the beginning was that you do have until November 20th to sign up for a new policy, and then you have till November 20th to make any changes to your insurance policy. So coverage will begin essentially on November 21st, and then it's a calendar year resets on the 20th, 21st of every year. So I do have an example in the next slide that we'll go through. And Chris, you may have to just tab through each of these boxes. So I did an example. Since I'm based in the Finger Lakes, I picked Riesling. So if you have 5 acres of Riesling, let's say that your histories support you as an average of 6 tons per acre, and you chose 75% as your coverage level, that guarantees you on your policy to 4.5 tons per acre. So sliding that down to the next line with your 4.5 ton per acre, let's say this year, it's really not looking good. So you actually harvested 0.5 ton per acre. That left you 4 tons below your guarantee. So with 4 tons below your guarantee, you would multiply that by the established price per ton, which is $1,535. And that leaves you with an estimated indemnity of $6,140 per acre, or total for your 5 acres at $30,700. And I do want to make note that that this will probably come up into play this year, just with how things are looking, especially in the Lake Erie region. There is an unharvested crop reduction of $35, and that comes off of the established price. So if you are not able to harvest your crop, and unfortunately, even if there is no crop, that reduction does apply. That is built into the policy. Hopefully in Amanda's section, that might be explained a little bit in greater detail, as that has been a frustration point for some growers. And I just want to make sure that growers are aware of it going into the season and going into having their claims being adjusted, that is going to be a component into your indemnities. So that covers kind of the basics. Again, rough overview, but Amanda will be covering a lot of things in greater detail in her section. So we can move on to the next slide.
All right, good afternoon, everybody. My name, as stated before, is Amanda McDowell. I work for RCIS Crop Insurance. I was an adjuster for quite a few years, and now I am currently the area claims manager. If you have any questions, please feel free to write them down or type them in the chat box, and I'll be sure to help you out as best I can. Next slide. Excuse me, an insurable crop. Grapes are insurable if you have a share in the crop, and there's actuarial documents to back that information up. Grapes are insurable if they are grown for wine, juice, raisins, or canning. They are grown in a vineyard that, if inspected, is considered insurable by the AIP. Grapes are also insurable if, after being set out or grafted, they have reached the number of growing seasons designated by the special provisions, and they have produced, on average, of at least 2 tons of grapes per acre in at least one of the last 3 years immediately preceding the insured crop year. For crops, types, and practices not insurable in your county, you may consult your crop insurance agent. They may be able to give you a written agreement. I'm going to leave that slide pause there for a second, so if anybody's reviewing that and has a question. Okay, next slide, please. The insurance period. We often get a lot of questions on what is my insurance period. If you are new for crop insurance, coverage begins on or after November the 21st. That is your first day of insurance. For insureds who are carryover, you've been here before and you're still here, coverage begins on the day immediately following the end of the insurance period for the previous crop year. For all insureds, coverage ends with the earliest occurrence of one of the following. When you destroy the crop, insurance ends. When you harvest the crop, insurance ends. Final adjustment of loss, when you sign your claim with your adjuster, when you abandon your crop, or we reach the date of November the 20th. So insurance ends when those items have occurred, or November 20th, and it begins immediately following the next day, or November 21st if you are a newly insured individual. Okay, next slide. Causes of loss and covered perils. So this is basically or essentially why you're seeing an adjuster, because you feel you have a covered cause of loss. What are they? They include adverse weather conditions, fire in certain situations, insects, plant disease, wildlife, and freeze. Now notice we have asterisks beside several of those causes of loss. Let's go down and we can read a little bit more into that. We also cover hail, frost, freeze, wind, drought, and excess precipitation. Those are fairly common. Excuse me. Earthquake, we are not hopefully going to see that in our area. Failure of irrigation of water supply if caused by an insured peril during the insurance period. That's not something we often see in our area. And this is something that I know a lot of you have had questions about. Insects and plant disease, except for insufficient or improper application of pest or disease control measures. So what does that mean? It could mean if you turn in a cause of loss as insect damage, your AIP may ask for some records to verify that you are putting on sufficient and proper application of disease control pest measures. Phylloxera is not covered regardless of the cause. And the next one is one I know we sometimes run into, the inability to market the grape for any reason other than actual physical damage is not an insurable cause of loss. So essentially, if you ever have a grape and you are unable to market that grape, you need to reach out to your agent. I'll give you guys a second there in case anybody's jotting down information or questions. All right, next slide, please. So duties in the event of a damage or loss. What in the world are you guys supposed to do? 1, you need to protect that crop from further damage by providing sufficient care. 2, you need to notify your crop insurance agent within 72 hours of your initial discovery of the damage, but no later than 15 days after the end of the insurance period. So remember, the end of the insurance period is November the 20th. You need to notify us within 3 days of the date of harvest should have been started if the crop will not be harvested. So say you have a very, very light tonnage out there and you feel like I'm just not going to harvest this crop. It is still your responsibility to notify us the time you would have been normally harvesting that crop. Provide notice at least 15 days prior to the beginning of the harvest date if the crop was damaged during the growing season and you previously provided notice, and you intend to claim an indemnity as a result of the damage of the damage previously reported, and not destroy the damaged crop until you are given written consent to do so. That's a lot of words, but basically we're saying do not damage, destroy, or do anything to remove that crop until you have let your adjuster had the opportunity to have some conversations. Okay. Next slide. Claims process. The insured sees crop damage. The insured notifies the agent. The agent opens a claim with your AIP. The AIP claims team should then contact the insured. You will get an adjuster assigned, and the adjuster will contact you throughout the growing season until harvest and the claim is completed or withdrawn. Next slide. So this is another one we often get a lot of questions on. It is production requirements for producers. The insured is required by the policy to keep complete records of planting, replanting, input, production, harvesting, and disposition of the insured crop on each unit for 3 years after the end of the crop insurance year. These records must include shareholder production records and production information for uninsured acres. So those are two little caveats there. Make sure if you have shares, you're keeping the records and information for your shareholder as well. And when you have uninsured acres, you're keeping track of that information also. The insured is responsible for providing separate records of production for each unit. If acceptable records have not been kept separate by the unit, production is considered commingled. So what exactly does that mean? Well, earlier they were speaking about possibly you could meet the requirements for optional units. Well, if you had 2 separate optional units, you did not keep your records separate by optional units, the picker went through and you just have one summary for 2 optional units, now you may end up having commingled production and they may get collapsed into one. At that point in time, you always need to contact your adjuster. Production to count for claim purposes will be determined by the following 4 methods: sold and commercially stored, weighed or farm stored, appraised, and fed. Now for grapes, we're not seeing all of these manners, but I did make some slides for what we typically see. Give you a minute. All right, next slide, please. Sold or commercially stored production. This is what we see a lot of. Insured must provide acceptable records from a disinterested third party, which include but are not limited to commercial elevators, packing houses, mills, gins, seed companies, marketing cooperatives, warehouses, or processors. The key word in this whole slide is a disinterested third party. That is a very, very, very important item to pay attention to. For all crops, acceptable records may include third-party summary and settlement sheets or appraised production. Okay, next slide. Third party. I was talking about that. What does that mean and what should include? Third-party records must include the name and the address of the buyer or commercial storage facility, the insured's name, the load or ticket number, the crop, the date weighed, unit identification, gross weight, tare weight, gross bushels, and if applicable, moisture and foreign material. Now, the unit and field information, some of this is perfectly fine for you as the insured to be writing on your ticket. There's no way to expect a cooperative to understand what field it came out of. Sometimes they do. But this is the information we are looking for an acceptable third-party summary/settlement sheet. Individual weigh tickets or load slips without supporting third-party records can't be used to determine production unless the third party will not provide records. All right, let's go to the next slide. Appraised production. So what do we do if we are not selling to a disinterested third party, or we are not going to be able to obtain the records needed from the disinterested third party? Appraised production. Appraisals to determine production to count may be performed when, but not limited to, farm stored production won't be weighed prior to being stored. Production will be direct marketed, i.e. sold on roadside stand. There are uninsured causes of loss. The insured intends to put the acreage to another use and not carry the crop to harvest. The insured intends to or does abandon or destroy the crop. The calendar date for the end of the insurance period has been reached and the crop will not be harvested. The amount of production showed on the production records appears to be questionable. All of the acreage will not or was not harvested. The crop will be used and stored in such a way that it will not be possible to determine the production after harvest. The insured is encouraged. This is my favorite one, everybody out there. The insureds are encouraged to accompany the adjuster and to participate in determining the appraisals. Remember, these are your grapes. We are adjusters. We are out there to perform our jobs, but at the end of the day, these are your grapes and your vineyards, and you are always, always, always encouraged to be part of the process and come along during the appraisals. Note, if a claim is settled based on appraised production, the insured must notify the AIP if the appraised acreage is later harvested. So if somebody out there is thinking, boy, I'm not so sure I'm going to harvest that crop, I think I'll just have it appraised. And you have an adjuster come out there and appraise it in October or November. And then later somebody comes along and says, hey, I'd really like that crop for such and such reason. Can we harvest it? You're going to need to notify your adjuster and your agent that you have decided to harvest that crop. And then they'll move forward from that point. Okay, next slide. These are the resources that were used for the past few slides. All of these links are links for insureds to read information as well as AIPs. My favorite link is the very bottom one. It is the RMA Grape fact sheet. I do have a few other comments to bring up. Deanna had brought up a comment about the $35 if you are not harvesting the crop. Anytime the code UH or unharvested is applied, you will have a reduction in indemnity. It is $35 per ton per acre. So if you're making that decision whether to harvest or not, just remember it is $35 per ton per acre that is subtracted from your indemnity. The RMA has stated that, and they feel that was for your harvest expenses. Next slide. I think that's my last slide. All right.
Yeah. Thank you, Amanda. So just a couple of things to wrap up, kind of what should be your next steps as growers. If you do have an active crop insurance policy, I'd encourage you to meet with your agent and review your schedule of insurance, or also known as your summary of coverage, to understand what your guarantees are, what are your established prices, and really understand what your policy is covering. If you are not currently insured, I advise and recommend you to reach out to your nearest crop growers agent and sit down, go over a quote for the upcoming crop year, understand what risk is out there and what can be covered with a crop insurance policy. And again, as a reminder, the deadline to sign up for a new policy or make changes to your current policy is November 20th every year. And then you do report your acres and your production to us by January 15th every year. So just a couple action items. I would definitely recommend that if you are in a scenario where you think there's a loss, if you don't already have a claim open, go ahead and get a claim open. Contact your agent, see what your schedule of insurance is going to be for this current crop year, and then make sure that you are, if you need to update your coverages for next year, that you're looking over that with your agent or establishing a new policy with an agent. And with that, that covers everything that we had prepared for you today. We thank you for your time, and I think now we will open up for questions.
Sure, sorry about that, I was muted. Thank you very much, Deanna and Amanda, for that very useful and important information. A couple of questions have come in. One is, if chemical overspray from a neighboring farm affects my production or yield, will crop insurance pay for that, assuming it meets the thresholds?
No, we only cover against causes of Mother Nature. So no, we would not cover that. You would have to take that up with your neighbor. And then we have some claims processes to follow if damage has caused some issues to document that on your behalf, but we do not cover that.
Okay, along those lines, how do things change if you're an organic producer, if at all?
Organic producers, we still,
like I'm wondering about in terms of crop protection required, you know, market prices for the product, that sort of thing.
The prices, I'd have to look in the special provisions to see if there is a difference in price and what they actually are, or the agents would be able to do that. As far as coverage goes, it's still only but it's still causes occurred by Mother Nature or natural causes. If you have insect damage, you would still have to show you're doing some form of mitigation. Then we would also have to see all of your organic certifications. And I believe in your organic certification packet, it should state what you should be doing given for the crop you're growing.
Okay. Another question is, when do I have to report my production and acreage changes to my agent?
So that date is January 15th. Any new acres added, any acres removed, new plantings, new vineyard that you purchased, all of that, and production history is by January 15th.
Okay, and along those lines, if I get new acreage coming into production after the reporting deadline, can I add that to my policy?
So if you did add it after that deadline, you would have to wait until the following year to have it added onto your policy. You can, of course, meet with your agent and get that ready to add to your policy, get it mapped out, but it would not be covered until the following crop year, but you should maintain those records for the current crop year.
Okay, that takes care of our questions. I will allow Deanna and Amanda to give us any final thoughts before we wrap up.
I guess my thoughts always, when in doubt, call your agent, and when in doubt, call your adjuster. That's what we're here for. So we really appreciate servicing all the grape growers and getting to know you. And I always encourage open conversation and asking questions because we all learn together. So thank you.
Great.
Yeah, I would just echo what Amanda said. If you have any questions or concerns, especially sitting down with the agent and going over your summary, that would be my recommendation. I did that last year with growers here in the Finger Lakes when the May freeze happened. So now that we're dealing with a similar situation out in Lake Erie region, definitely would encourage growers to make sure that they understand what their coverage is in preparation for going into the claims process.
Great, thank you. With that, I think we will wrap it up and give everyone a little bit of time back. As I mentioned at the beginning, this webinar will be recorded has been recorded and will be archived at our website, which is farmcrediteast.com/webinars. That's where all our webinars live, past, present, and future. So check out that URL for future webinars that we're going to offer, as well as if a colleague of yours wants to, or someone else wants to view the recording of this webinar. So with that, I will end the webinar, and we will see you next time. Thank you very much.
Thank you.